hi everyone, and welcome to the daily currency call with Forex Trading Asia. And great to see some familiar names back and a few new ones as well. So welcome all, and just a quick introduction as well to anyone new to the currency call as well, presented by Forex Trading Asia. This is episode 395 for the 13th of October. And it is the currency call that is done every Monday to Friday from 11 a.m. GMT plus 8 time zone. And the currencies we analyze are as follows. Mondays, we do the Aussie and Kiwi. Tuesdays, we do the Euro. Wednesdays, we do the pound pairs. And then Thursday, yen and gold. And then on Fridays, CAD and cryptocurrency, Bitcoin and Ethereum specifically. Now, this is the currency call where you will get market economic updates, the key support and resistance levels, trade ideas, and much more. And this currency call will be very beneficial to both the long-term investors and the short-term traders. And here we will go through what could move prices, possible trade ideas, and we'll also highlight the potential targets and risks. A disclaimer as well. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Now, we do have Gim Hong back as well, and it is definitely timely because we do have an FOMC meeting out very early tomorrow morning in this time zone. And he'll just go through what to expect from that as well. And he'll just explain the significance of the event as well. So over to you now, Gim Hong.
All right. Thank you, Scott. Happy Wednesday, everyone. It's great to be back. Okay, so the Federal Reserve will be releasing their meeting minutes, okay, for the most recent monetary policy meeting tomorrow at 0200 hours. All right. So, what to expect? It is likely going to be uneventful, all right? Meaning may not be market moving personally. That's what I feel, okay? So during the most recent meeting, the Federal Reserve, okay, sent out a hawkish tone, okay? If you guys recall, they actually mentioned in their rate statement that if progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted, all right? AKA, i.e., they're going to carry out a QE tapering, okay? If, let's say, the ongoing progress were to continue, right? So that was what they sent out during the meeting, the previous meeting, which actually, it was very hawkish, personally, I feel that, okay? And USD strengthened as a result and things like that, okay? So this time round, all right, we have two things in focus, QE tapering and rate hike. Nothing's new is going to be coming out, okay, for both the QE tapering and the rate hike part, all right? Now, for the QE tapering, why do I say so? Is because the current situation that we are in is the most hawkish one that we can be in, okay? Why is that the case? Now, the market is actually expecting a tapering announcement to be made during the November's meeting, all right? And since there's no meeting in October, all right, it is not possible for the Federal Reserve to actually carry out a tapering announcement earlier than the November's meeting, all right? I mean, they can't just, send out an abrupt message saying that we are going to taper QE as of November or as of December, right? In the middle of nowhere, because this is not something as urgent as, when they actually announced a cut in interest rate last year during the pandemic, right? It's not as urgent as that event, okay, that incident. So, with that, we just have to wait for the November's meeting before a possible tapering announcement will be made by the Federal Reserve, okay? So that's the most hawkish, how do you call it? The most hawkish possible scenario that we are in right now, okay? So if we can't get any more hawkish, is it possible that we get a bit more dovish? Personally, I feel that it's unlikely, okay? Although, I mean, it's possible, right? Anything is possible. So the possible scenario can be something like, the Fed highlighting that jobs figures, if jobs figures are not satisfactory enough, okay, in the near future, then that may actually push back the tapering announcement. There will be a delay in the tapering announcement. Okay, so that is the possible dovish tone that the central bank can actually sense out. All right, but of course, I mean, it's still very vague, right? Right, when it comes to like figures and things like that. If the jobs figures is not satisfactory enough, so how do they actually define not satisfactory enough? With the recent 100 over 1,000 jobs being added for the month of September, okay, is that considered satisfactory enough or not? So the Fed will have to be more specific in this context. All right. So unless a figure is being given, even saying this whole jobs figure not being satisfactory enough statement line is unlikely going to cause much movements in the US dollar. Okay, so that's for the QE tapering. We can't get any more hawkish. In terms of dovishness, it's unlikely going to happen. Okay, now on to rate hike. We're not going to be seeing rate hike anytime soon. All right, at least the earliest is probably going to be like next December. Okay, 2022 December. Okay, why is that the case? Let me just show you. So during the most recent meeting, okay, the central bank released their quarterly report. Okay, if you guys can remember. So what you're looking at right now, actually, can you guys look at it? Because I think my screen just freeze once again. Can you guys see the dot plot? Still loading? Yeah. How about now?
Nope. Okay.
No. Oh, all right. Okay, great. So what you're looking at is the dot plot, right? So we want to focus on 2022, which is the near future as of now. Okay, so we can see that 9 out of 18 members actually projected a interest rate hike to be carried out. Okay, at least one. All right, for the year of 2022. Okay, so the previous projection material back in June. Okay, that I think there was only seven members are projecting a hike in interest rate. Okay, but now we are seeing 9 members projecting. So that's actually a very hawkish tone sent out by the central bank during the most recent meeting. Okay, so with this this carried forward projection, okay, carried forward timeline of a hike in interest rate, okay, that's pretty much the most the central bank can actually send out, can actually deliver in terms of communication tools as of right now. All right, because the minutes is unlikely going to state like like specifically which month of 2022, maybe July or June and things like that, right? Because as we know, for years, okay, it's been for years that the projection material, the dot plot, okay, is the closest we can get in terms of knowing, when the interest rate may change. Okay, when the possibility of an interest rate change may take place. All right, so we won't be able to get our hands into more specific details like specific months and things like that, right? So that's the closest we can get. So in terms of rate hike, okay, the minutes, it's unlikely going to provide more details, other than just reiterating the whole point that the employment condition for a rate hike is more stringent than the condition for a QE tapering. Okay, so from time to time, just to make things clear and to prevent any ambiguity, the central bank, the Federal Reserve, has been saying that yes, significant progress has been made towards employment, and then Powell chip in saying that it does not take a spectacular jobs report for me to be convinced that it's time for us to cut QE. Okay, but for rate hike, it's different. It's a whole different matter. Okay, they will want employment figures to be very, very, very strong. Okay, way beyond the pre-pandemic level. Okay, before they may actually be carrying out a interest rate hike. Okay, so with that, let me just show you a tabulated table of the employment's figure in the US. All right, so as you can see, you guys actually watched the non-farm post non-farm video that was posted, I think, on Monday. All right, you guys would have seen this chart. Okay, I'm just bringing it up again just to show you how far are they from pre-pandemic level? Okay, so as of the most recent release of the September's report, and also with the two upwards revision for the July and August figure, okay, the United States at the moment is still some 5 million jobs away from the pre-pandemic level. Okay, so that's how I would say how far it is, how far it is from the pre-pandemic level. So unless these 5 million jobs, okay, are being recouped, and what do you call that? And of course, there's a stronger than pre-pandemic level jobs market, okay, were to be achieved. Otherwise, it is highly unlikely that the Fed will actually be carrying out an interest rate hike. Okay, so if let's say QE were to start in November, okay, next month, all right, then from then on, let's say they actually carry out a $15 billion tapering per month, okay, on a monthly basis. It will take them 8 months to actually put the current QE program to a complete halt, all right? And like what Paul has said, once the QE, okay, the ending of a QE program may not necessarily indicate that a rate hike is coming, okay? Although, no doubt, for sure, although it brings the possibility of a rate hike closer than ever, all right? Because what's next after the complete halt of a QE? It's the rise in interest rate, all right? So yeah, I mean, even if the QE program were to come to a halt by next, say for example, mid 2022, okay, as some of the Federal Reserve Committee members have highlighted recently, okay, especially Bostic yesterday during his speech, he actually said something like he's expecting the QE program to come to a complete halt by mid 2022. Okay, so even so, it still depends on employment in this case. Now, if we are going to see like 194,000 or 300,000 jobs being increased, being created, okay, on a monthly basis from now until mid 2022, which is like 8 months, okay, suppose it's 400,000 jobs gained per month, okay, then we'll be seeing some 3.2 million jobs gained by June 2022, okay. That is still, that's still going to put the US jobs market like 2 million away from the pre-pandemic level, which is why, the central bank always highlights that, well, specifically Powell, keep reiterating that, with this halt in QE program, it's not going to be the case that we will increase interest rate immediately. All right. So don't forget that we have another component that we should be paying attention to, which is the US inflation rate, right? Which actually will be, the most recent data will actually be released later on today. Okay, so pay attention to it as well, because the inflation rate and the employment rate, okay, are two of the most important components that the Federal Reserve will be paying attention to when it comes to a shift in monetary policy stance, okay, from maybe, from loosening to tightening, tightening to loosening, and things like that. All right. So yeah, with that, if you guys are planning to trade the FOMC minutes, personally, I don't think it's going to be, I personally feel that it's going to be uneventful, meaning not much movement is going to be it's going to be created during that period of time. If let's say the Fed were to reiterate all the hawkish messages that's been delivered during the meeting, okay, then, chances are it's just going to cause a little bit of movement because, nothing's new, right? Everything has been reviewed to us. So with that, I will hand it back to Scott.
All right, thanks for that, Kim Hong. And just in the chat for everyone's reference, I have shared that video. So this is a separate video from the currency call that was done yesterday. So it's titled Post NFP Non-Farm Payroll Summary. So I would encourage you to check that out. And that goes into a bit more detail about what happened with the NFP result on Friday night last week, which was definitely worth exploring just, to understand the significance of that. And I've also shared the LCMS Traders Club link for the free 1-month trial as well. That's still available. So I definitely check that out as well. But let's get into the US dollar index analysis now. And a little bit to talk about again. This was, somewhat unexpected as well. I've just got the charts up here thanks to Sam Trade, and we did actually get through 94.50 as well last night. What was interesting though as well was the fact that the 10-year US Treasury bond yield actually pulled back. And what I would say to that is just the markets are somewhat jittery. They have moved quite a lot. The Treasury yield has moved quite a lot, and we saw it flatten out at about 1.57%. We are seeing the US dollar pull back here, which I think is reasonable considering the lack of a catalyst until what Kim Hong mentioned just before, which was the CPI data that's coming out tonight as well. Bit interesting, just from the session so far today, we've seen the US dollar obviously pull back a little bit, but we've also seen the Australian equity markets as well. They've pulled back a little bit as well, but still a little resilient. It's just really a time to wait now. And if you are trading, I think there was some commentary last night in the EchoFin, in the LCMS traders chat as well about shorter term trades, and sometimes it's best just to sort of wait out because it's been a little bit all over the place, honestly. For example, the Aussie dollar. And then we've obviously got the euro, which nearly broke down. We mentioned that as well in the currency call yesterday. I have shared the link for that video as well. And make sure you check out the YouTube channel too. If you are not able to get all these currency calls, we upload them. And we also share the significant points with the timestamps as well, so you can get straight into what you're looking for. But I also post the summary comments in the Traders Club as well. But from the perspective of a trade idea, there are a lot of people saying that it's really challenging to see that inflation number come under expectation. But then you'd have to say how much is priced in if it comes in expected. And Kim Hong also mentioned that, and I'll just quickly share this as well. We did have last night, I'll just bring up the Forex economic calendar, and we did have Clarita and Bostic speaking, and both of them did mention the fact that the inflationary pressures are going to be a little more ongoing for longer than first anticipated. So, which really means that it's another way of saying it's not so transitory. So I would say brace yourself for, even if it comes in as expected, it's going to be tough to see this US dollar trade lower below 94 for now. So I would say be careful if you are trading reversals, for example, on the pound. And with that, we do have the pound in focus, and it is actually proving to be at an interesting point as well. So we have Jin here now, multi-million-dollar trader. We'll just be going through what is happening with the pound and any potential trade ideas. Over to you now, Jin.
Thanks for that, Scott. Today being Wednesday, we are looking at the pound, dollar, and also the euro pound. As Scott was just saying, before this call already, if you're a club member, you would have noticed here on the platform, the EchoFin platform that I'm just sharing with you, showing you most club members, I think you're all reading and watching, but you're not contributing. And if you're not already a club member, these are the kind of things that we go through even before the call and throughout the day. I don't know whether Tony is on the call now, but talking about the pound dollar with a possible head and shoulder, descending head and shoulder, talking about the possible moves even before this call. So to shed a bit more light onto that, looking at the Forex Trading Asia economic calendar here, what could move the pound dollar quite significantly today is, today being Wednesday, we do have at 2 p.m. GMT +8, the pound GDP numbers month on month. It was previously a 0.1%, but if you look at it historically, it was even a 1% before that. It came out at 0.1. As I was telling you yesterday already, I think that we might see a good GDP number here for the pound. I'm anticipating maybe a 0.3, 0.4, even a 0.5 for GDP month on month. And if we do see that good number for the UK GDP, then we could see that strength coming through on the pound dollar. But any strength we see at this point might be a bit short-lived, because later in the night we do have the core CPI numbers looking to go from a 0.1 to a 0.2, and a CPI month on month looking to stay at a 0.3%. All that put together, what I could anticipate is some pound strength, some UK pound strength in the short term for this afternoon maybe, and then towards the night and towards the later part of the trading session, we possibly could see the dollar strength come back into play. That also coincides with what Scott has been sharing with you about the dollar index. Yesterday, we were talking about or considering whether the dollar index would hit that 94.50 range or level. It did go to 94.50 very early on, or late on last night and early on this morning, hit that level and retrace back down. I feel that that retracement at this point is a bit of a, well, it is a retracement. So I anticipate that we might see that bounce back up and possibly see it breach that 94.50 level. So with all that put together, what you could be looking out for in terms of the pound dollar, sharing with you here the charts on the H4 time frame. Pound dollar sitting or recently bouncing off that 1.3584 level, currently at 1.3614. What I think is likely to happen is that with the good GDP numbers coming from the UK, or possibly good GDP numbers coming from the UK, what we could see here is an upward move on the pound dollar. And it could happen quite soon at a 2 p.m. news, so that's in a couple of hours time. I think that we might see it come close towards this week's high point, which is about 1.3655. That's not really a good tradable range at this level, but you could also see it breaching past this recent high. What I anticipate is that we could see it form a triple, a very short-term triple top before coming back down again. So what I'm actually more looking forward to is for it to come back down. Still not looking to trade. I'm actually more looking for it to break below that 1.3584 level and to look for that selling opportunity. So I think what's going to happen is it's going to sit there, it's going to go up, possibly even maybe a little bit higher, turn back down, still not doing any trades, but I'm looking to see whether it's going to break past this support level. So a better trade idea, this could be very closely managed trades that you might want to do, but a better trade idea that I'll be looking for is below 1.3566. Below 1.3566, I'll be looking to sell a good 35 pip stop loss for a very good 150 pip take profit level towards the low from 2 weeks ago at about that 1.3424 level, recent low level. Okay, so look for it to break. A lot of patience required here. Look for it to break that support level before we could see that big downward move. If we do see the pound dollar break lower towards that 1.34 level, then what's likely to happen here on the euro pound is that we might see it form a very good base at this zone. Throughout throughout this week and also late last week, we've seen it bounce around this area. We've seen it test that 84.62 level, tried to go higher, hasn't really found a real direction. I think this consolidation here might actually have a breakout towards the upside if we do see the pound dollar drop below that support level. As the pound dollar drops, we could anticipate that inverse relationship with the euro pound, pushing it up towards that 85.38 level and possibly even higher. So at this point, what you'll be looking for is a candle close. Look for it to close above 85. You might have a very tight stop loss of 15 pips for take profit of 30 first. and then possibly up towards that 85.90 resistance level. So quite a few trade ideas here that could be had for both the pound dollar and the euro pound. I would say that these would be mostly movers by the news. These will be mostly moved by the news, especially the GDP and also the CPI numbers from the US later tonight. With that said, I would also remind all Traders Club members that we do have a live trading session tonight. The news is at 8:30, so we will be looking to trade the CPI numbers together, and then also possibly looking into some other trade setups live as we go through the charts together for trades that might happen over the next couple of days. I do see a lot of opportunities on the yen pairs in particular. So tonight we'll be talking about that. That might give you a bit of a front run into those trades before we look at it in detail or briefly on Thursday morning. So let's look at it in detail tonight, and we'll talk about it, the yen pairs, tomorrow morning. With that, I'll pass it back to you, Scott.
Thanks for that, Jin. And also just in the chat, I've just shared the pound trade idea as well as the euro pound trade idea as well. And again, we are offering that 1 month free trial. The real key thing is to be involved with a community of individuals that are looking to help as well. So you might have the trade ideas, but really that's not all the ingredients to make you a successful trader, honestly. It's just one part of it all. And I would, really just strongly recommend, you just take the advantage of this and really, just use it because it's so important. And you've got a lot of different people from all different sorts of backgrounds in regards to trading. So I would strongly, recommend that as well. All right. So just quickly as well, definitely share the link as well, guys. So share the currency call link around, and I would say that, just spread the word as well. But again, we do have that live trading call as well for tonight. It's going to be a pretty big event with the inflation data that's it's been accumulating with all these concerns, and this figure is going to be a big catalyst to drive things as well. Now, one thing as well, 8 p.m. GMT +8 as well. Is it 8 p.m., Jin, just to confirm?
Yeah, it is, because the news is at 8:30, so we'll do it a bit at 8 o'clock.
That's it. Now, also one more thing as well. So if you are, been watching things and, you're, learning, but you're looking to really, take advantage of the expertise that is on show here as well, I would strongly recommend checking out our Forex Briefcase. So this is the managed account service that is available. Again, we're ticking close to over 101% now in 36 months, or just over 36 months. And in fact, this year itself, we haven't had a negative month at all this year. So I would strongly recommend, just checking that out. Go to the website, leave your details as well. Or if you're in the Traders Club as well, we've got a Forex Briefcase forum as well. So either I, Jin, or Steve as well from Australia, from New South Wales, he's there as well. So, feel free to get in touch. And I am an investor personally as well. And I'm glad that I have done that as well, because it's a nice way to diversify your income as well. But look, that is all, guys. And thank you so much for watching the call, and hope to see everyone tonight or wherever you are in the world for the live trading call as well. Thanks, guys, for watching.